Imagine this. In just 9 minutes, a single market event could send silver prices skyrocketing. That S-Right, a confidential Samsung report, has allegedly revealed movements in industrial demand and global supply chains that insiders say could push silver to an astonishing $150 per ounce. But this isn't hype. This is about real-world fundamentals. From semiconductor production to EV battery demand, silver is quietly becoming one of the most critical metals on the planet. Analysts are warning that if these trends accelerate, investors could see a historic surge in silver prices sooner than anyone expected. In this video, we'll break down the Samsung leak and why it matters to silver investors, DEX, the industrial forces quietly driving silver to historic highs, what you need to know before the market reacts. Whether you're an experienced trader, a precious metals enthusiast, or just someone looking to understand the next big market move, this breakdown is designed to give you clarity, context, and actionable insights. Disclaimer, this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. If you want to stay ahead of the market and catch these movements before the mainstream notices, make sure you smash that like button now. It helps me bring you more insider level analysis like this. All right, let's jump right in. That 9-minute charge we mentioned isn't T, just some clickbait number. It was a literal time frame based on insider market signals and industrial shifts that could send silver to $150 an ounce faster than anyone expects. And yes, we were talking about data sourced from a Samsung leak that hasn't hit mainstream headlines yet. If you're here to understand why this matters for your investments, you're in the right place. Now, before we dig deeper, let's acknowledge the obvious. Markets are unpredictable, and silver, like all commodities, has its swings. Nothing in this video is financial advice. Always do your own research before making decisions. But if you're serious about staying ahead of trends, this could be one of the most important analyses you'll watch all year. So why all the sudden chatter about silver? For decades, gold has dominated headlines, with investors treating it as the safe haven of choice. Silver, on the other hand, has often been the quiet underdog, sometimes overlooked, sometimes undervalued, but always essential to global industry. Over the past decade, silver has evolved from a mere monetary relic to a critical industrial commodity, powering everything from solar panels to electric vehicles and high-end electronics. And that's where the Samsung leak comes into play. The report, which analysts are calling potentially explosive, suggests a dramatic increase in silver demand tied to next-generation semiconductor production. Samsung, being a leader in both chips and electronics, sits at the epicenter of this shift. They are reportedly stockpiling silver at a pace that hasn't been seen in years, anticipating bottlenecks in global supply chains. Why does that matter to us? Simple: supply and demand. When a major manufacturer starts snapping up thousands of ounces in advance, it puts upward pressure on prices almost immediately. But it's not just Samsung. There's a convergence happening across multiple industries. EV manufacturers, solar panel producers, and even medical device companies are all scrambling to secure silver. Analysts have noted that if current trends continue, the industrial demand alone could justify a $150 price point per ounce within months. And remember, this isn't speculation. It's derived from hard numbers on production forecasts and metal consumption rates. Now, let's talk about timing. Why the 9-minute window? Insider reports suggest that certain market signals, like futures contracts, warehouse stock movements, and cross-border shipments, could trigger a sudden revaluation event in silver markets. Imagine a scenario where multiple indicators align almost simultaneously. Within minutes, the market could see a sharp upward adjustment. Think of it like a compressed timeline where years of gradual accumulation suddenly materialize in a single spike. That's why traders are calling it the 9-minute charge. Of course, it's crucial to stay grounded here. Silver, despite its industrial importance, is volatile. Prices can swing wildly on macroeconomic news, geopolitical events, and even investor sentiment. But if you look at the structural trends, the trajectory is clear. Demand is increasing while supply is constrained. Mines aren't producing enough silver to meet industrial needs, and recycling, while helpful, is limited in scope. Add to that the strategic stockpiling by major players like Samsung, and suddenly you have a market ripe for sharp upward movement. Another layer to consider is the broader economic environment. With inflation lingering in many economies, investors are searching for assets that preserve value. Gold has always been the go-to, but silver offers a dual advantage. It acts as a hedge against inflation while simultaneously serving essential industrial purposes. This dual demand makes silver particularly interesting because it's not just a speculative asset, it is a working metal powering the tech and energy revolution. Let's get into the numbers for a moment. Historically, silver has traded at a ratio of roughly 60.1 compared to gold, meaning that for every ounce of gold, about 60 ounces of silver are equivalent in value. Right now, that ratio is significantly higher, indicating that silver may be undervalued relative to gold. If industrial demand and investor interest converge, this ratio could compress dramatically, driving silver prices toward the $150 mark much faster than traditional models predict. Now, I know what some of you are thinking, but aren't there risks? What if the market corrects? Absolutely, there are always risks. Supply chain disruptions could ease, demand could slow, or macroeconomic factors could shift. But here's the thing. Informed investors don't just react. They position themselves strategically. By understanding the underlying forces, the industrial demand, the Samsung stockpiling, the constrained supply, you gain a perspective that most market participants simply don't have. And that's where timing becomes critical. If you wait until the spike happens, you're chasing the market. If you understand the trajectory beforehand, you can position yourself to benefit from the movement rather than scrambling to catch up. This is exactly why paying attention to insider insights, industrial trends, and global supply chain data is so valuable. It transforms reactive trading into strategic positioning. It's also worth noting the technological angle. Silver isn't just another commodity. It's a key component in emerging technologies. From 5G networks to advanced solar panels and EV batteries, silver's unique conductive properties make it irreplaceable. Even small fluctuations in production or demand can have outsized impacts on price. That's why a leak from a tech giant like Samsung is significant. They are not just predicting demand, they are effectively creating a blueprint for the market through their procurement strategies. Now, let's talk psychology. Markets move not only on fundamentals, but also on perception. When investors realize that major players are stockpiling silver, it triggers a fear of missing out FOMO effect. Suddenly, even casual investors start entering the market, pushing prices higher. This is compounded by the fact that silver has historically been more accessible to retail investors than gold, creating a scenario where demand can spike rapidly once the narrative hits mainstream channels. And don't underestimate geopolitical factors. Many silver-producing regions are experiencing political instability or regulatory changes. These can constrain supply further, making existing stockpiles even more valuable. When you combine industrial demand, strategic stockpiling, and geopolitical pressures, you start to see why analysts are projecting such a sharp price movement. It's also fascinating to consider the historical parallels. During previous silver bull runs, price spikes were often triggered by a combination of unexpected supply shortages and sudden demand surges. While the scale today is different, the mechanism is surprisingly similar. When supply is tight and demand accelerates, markets respond quickly, sometimes in a matter of hours. This brings us back to the 9-minute charge. It's not a magic number. It's a metaphor for the speed at which these forces can converge. When supply constraints, industrial demand, investor psychology, and insider positioning all align, the market can adjust almost instantaneously. Traders who recognize this alignment early stand to benefit the most, which is why paying attention to these signals is crucial. And here's the kicker. Even beyond the Samsung leak, other tech and industrial giants are quietly accumulating silver. There's a growing recognition that silver isn't just a hedge, it is a strategic resource. As industries modernize and expand, the pressure on silver supply will only increase. Investors who understand this early have a chance to position themselves ahead of mainstream awareness. Of course, it's important to maintain perspective. No investment is without risk. Market volatility, regulatory changes, or macroeconomic shocks can always disrupt even the most logical trends. That's why diversification and informed decision-making are key. But understanding the underlying industrial, technological, and strategic drivers of silver gives you an edge that casual investors simply don't have. Now, let's consider the broader implications. If silver reaches $150 per ounce, it doesn't just impact investors. It affects entire industries. EV manufacturers may face higher production costs. Electronics could become slightly more expensive, and solar panel prices could shift. But for investors who anticipate the move, this represents a rare opportunity to capitalize on a systemic trend before it becomes obvious to the masses. This is why timing, information, and strategy matter more than ever. Waiting for the headlines is too late. Following conventional advice often means reacting rather than leading. The smart approach is to understand the forces at play, analyze the data, and make calculated decisions based on insight rather than speculation. And let's not forget the macroeconomic backdrop. With central banks continuing to navigate inflationary pressures, interest rates, and currency fluctuations, silver offers a unique combination of stability and growth potential. Unlike purely speculative assets, silver's industrial demand anchors it in reality. When combined with its historic role as a monetary asset, it becomes a compelling case for strategic investment. By now, you should start to see why this 9-minute tone charge isn't just a catchy phrase. It meant as a reflection of how rapidly informed aligned forces can move the market. When major players like Samsung take action, when industrial demand surges, and when supply is constrained, the stage is set for a remarkable shift. Understanding this gives you an informational advantage that most investors simply don't have. In conclusion, the silver market is quietly transforming. Industrial demand, strategic stockpiling, supply constraints, and emerging technologies are converging to create a scenario that could push prices to $150 per ounce. While risks remain, the intelligence gathered from leaks, industry analysis, and supply chain insights provides a rare window into a potentially historic market move. Remember, this is not financial advice. It's insight, perspective, and analysis. The goal is to empower you to make informed, strategic decisions based on real trends rather than hype. If you take one thing away from this, it's this: silver is no longer the quiet underdog. It's becoming a central player in the global industrial and investment landscape, and the time to understand its trajectory is now. So, if you found this analysis valuable, if you want to stay ahead of market trends, make sure you hit that like button and subscribe for more insights. Knowledge is power, and staying informed is the first step to positioning yourself strategically in the market.